GTii making breakouts, making fake outs, making all kinds of traps over here. But I want to be able to talk to you about some particular things within this because there may be a glimmer of hope, but we still need to solidify a few things to the downside. Okay, let's go ahead and talk about this now. What is up, you guys? This is ARCa coming at you with a GTii technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community within Discord called ARCab. But with that said, let's go ahead and dive right into the charts. So we're looking at GTii on the 4-hour chart here, and we can see that we've been riding this downside move. I did present the possibility of getting facing a bull trap here based on the resistance that people may not be seeing on this descending triangle. Okay, so we actually did get that bull trap, and after that print of a huge evening star doji, we continued on to the downside. Okay, so the price objective was absolutely met per the breakout area of the right angle triangle. And it has been met, and now it's being used as a form of support. Okay, let's go ahead and move on to the next chart. There are some important things to touch on within all the charts. So let's go ahead and look at this. This is the daily chart that we found, and this is particular to the descending channel, and it is also the channel that is signaling a potential reversal, all in all, of the price action for GTii. So we've actually been on an overall downtrend. Yes, massive upside and massive downside, but the macro perspective is in a downside. So now this would essentially be the $9 run that we had is the break of market structure. So usually when we're looking at for example, the golden rule of three, for example, this, we have a breakout number 1, we have 2, we have a breakout number 3, the accumulation or capitulation event happens, and then breakout number 4. So as it happens, upon breakout number 4, we actually still need, I actually told you guys up here that we still need to touch and confirm our newly converted resistance of the channel, particularly into support. So now I did measure a form or an area of support before we can continue some upside. As you can see right over here, we actually dove right to the area where I talked about. So this was the 1.618 that I was recommending at this with these arrows here. You can see that this candle actually had very much, both of these candles have very much lots of confluence with this area here. So now the candle that we are printing today actually came right back down. Let's zoom in so you can see the touch of that newly converted resistance into support. Take a look at this right here. I mean, it comes right back down to test it. So this is a test, this is a test, this is a test. So we are literally in the process of confirming this massive descending channel as a valid form of support before continuing on to the upside, which leads me to believe that there may actually be some type of insider news or some type of something happening within the fundamental catalysts that can actually launch GTii to the upside. Okay, so now let's move on to the next chart. Okay, I noticed something very particular here. So this orange line that you see here is actually the NASDAQ index, the NDX, and I have noticed several iterations of inverse price action correlation. So as you can see here, we have a huge arch here, while this has a massive arch to the downside. Now, as the Fed gave us the good news about potentially starting to ease off the rate hikes and maybe seeing the 50 bips or basis points, sorry, I'm just so used to talking in short, So he talked about that, and we since got a massive rally. And since that rally, you can actually see that GTii has been inversely moving to the price action of the index. So this is very curious to me. And even as you zoom out, you'll be able to, okay, sorry about that. So you'll still be able to see like inverse correlation like this over here. Okay, so there is some interesting price action happening between the indices and GTii, which is which is very curious to me. Okay, and yeah, I had a trend. I'm gonna go ahead and get the Nasdaq index out of the way. I had a trend line here that. This is the 3-day chart. So this is a macro perspective. Every single candle you see here is a 3-day print. And you can see that we've been in this ascent and we broke it, but we since recovered it. So it looks like we're actually respecting this trend. And this is very much in accordance to what I am looking at within this falling channel here. Well, I'm sorry, the descending channel here. So the touch of this, the failure of this in recovery is what I'm actually looking at. And yeah, it's very curious that it is following it, so people do see this. Okay, so let's go ahead and move on to the statistical side of this analysis, which is something that we need to actually look at right over here. So let's, for the new viewers, this is volatility you're looking at represented by this indicator, BBWP. BBWP is actually direction neutral. Volatility is direction neutral. So we pair it with an indicator like this one, which is proprietary to TradingView software. This is stochastic momentum, which gives us a bias for that direction, or the direction of the asset. So in this case, I have actually back tested this ticker. I'm sorry, the stochastic momentum, particularly to the GTii ticker, and we did get through. First of all, throughout the entire trading history of the GTii asset in the 3-day chart. So I did notice that we have a total of 11 iterations made from a back test that consists of volatility versus momentum. And now, particularly to the momentum indicator, out of 11 iterations, the momentum indicator guessed the asset's upside direction 10 out of those 11 times, giving us a momentum upside accuracy of 90.90%. Okay, so this is not perfect, but it's very, very good to consider. And I have also noticed that we're in this, we do have a trend line regression rejection type of thing happening here. So, and I did mention in the previous videos that I am still looking for a continuation to the downside to potentially catch the lower areas of the stochastic momentum so that we can reset our statistical metrics. The statistical metrics are acquired by this criteria here. So anytime that we have started a contraction phase to the downside from critical volatility zone, which I can from a critical man, I can't speak today, you guys. I'm sorry. I'm gonna just literally quit. Okay. Anytime that we have reached the critical volatility zone, which I consider to be anything above this 90% trend line, which my cursor is over, I have taken note of that iteration's upside thrust versus the duration versus the amount of times that volatility versus momentum profile have guessed the upside correctly or incorrectly. So those metrics actually got us these statistics. Out of a total 11 iterations, we have correct 7, which gives us an average upside accuracy particular to the volatility versus momentum profile of 68.63% with an averaged upside thrust of about 3,200% over the span of just over 30 days. We do need to meet that criteria though. We are in the process of resetting these statistics. In order for us to apply these metrics, we need the momentum component of the BBWP indicator and the moving average both above the critical volatility zone, which remember I consider to be above 90%, and also the stochastic momentum pivoted towards the upside. In that criteria, we would be able to apply a 3,000% move to the upside, which could actually be. I'm going to correct this, but this $90 is it actually may be more like let's see. It actually may be more like $70 now that the criteria is going to be re-met, okay, or reset, sorry. So in doing that upside thrust to about $70, you can actually see this trend line here actually following a trend. So there is the potential to where we're making macro highs on our way up. This is the 3-day chart, so this is going to take some time and patience. So this is for sure for sure macro scale. Okay, so this is going to take days and days, hence the reason why the suggestion is over a month. So upon the criteria being met, remember, we need to be up here, which can take days from now for us to be able to get into this area and down below the 20% mark of the stochastic momentum for us to be able to reverse and apply that upside metric. Now let's go ahead and move on to the last part of the chart for the immediate short-term time frame bias. Okay, so now this is the RSI profile that I actually have. This is a diagram that I made particular to these 4 zones here of my RSI. I made this for you guys so you can see the 4 zones so you can tag along. Okay, 30-minute immediate short-term time frame is literally suggesting a neutral direction. Okay, we can't give this any credit. Okay, you're looking at the RSI signal and the moving average 14-day period represented by the pink line. Okay, so now the bi-hourly is suggesting a continuation onto the upside, but please remember, if you know if you're a regular listener, you'll know that when we're in the deep areas of either zones or the shallow areas of whatever zone, we're more than likely going to be rejected and faced into the opposing zone. In this case, we are in bear strength percentile and well within the grips of it. We can actually find rejection and continue on the way down. Okay, the good thing is that the RSI moving average is suggesting a continuation onto the upside ever so slightly. Okay, so let's move on to the 6-hour and see what it's got. Okay, so the 6-hour RSI is validating what we're talking about here, potentially being rejected. This is suggesting a continuation onto the downside from an oversold percentile. So this, and it is pretty aggressive. So this we're likely to see some more downside. Now the daily chart is rejecting just like what I'm talking about here. So it is rejecting the I'm going to zoom in a little bit so that you guys can see. It is rejecting the deep areas of the bear strength percentile, which likely means we're going to dive right back into oversold. And as you can see, the moving average is pretty aggressively suggesting a downside continuation and entering the bear strength percentile. Okay, so this is, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, do your own DD and we'll be fine. Okay, you guys. All right, so this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me within Twitter or Discord. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community. Okay, so but with that said, I wish you well. I wish you a good night, and I will catch you at the bell mañana. Adios.